Hello and welcome to another episode of the Stock Market Today video. This is your IBD live, well, not IBD live, but your IBD recap of what is going on with the market this day and also this week. And it was a tough week out there. Joining me to help with the construction destruction that we were dealing with is Mike Webster, our senior market strategist. Welcome, Mike. And man, we thought October was bad. November didn't start off that much better. It's been rough out there.
I do not have an appetite for the type of destruction we've been seeing.
Yes, I'm with you there. Just as I was in, well, let's see, what was it, 1992 concert, Metallica, Guns N' Roses. I was there, San Diego.
I was there too. Dodger
Nice.
Stadium, right?
No, I was in San Diego. Yeah.
Oh,
So,
you were in
all
San
right.
Diego.
Yeah,
Okay.
but very good stuff. Well,
Yeah.
we'll take a quick look at the markets and how they finished. Market indexes finished at the highs of the day. So even though a lot of them were down for the day, they were well off their lows. So a lot of upside reversals that we were seeing out there. So that was a positive. Let's just run through the numbers real quick. The NASDAQ composite, that was down 0.21%, but closing in the 99% closing range. Doesn't get much better than that. The 90% true range, for those of you that follow that, that basically, instead of taking the day's high, takes the previous day's close as the high and uses that. But yeah, very good reversal there. The Qs were down 0.32%, but again, closing well off their lows. They were, down as much as both the Nasdaq and the Qs were down as much as 2%, over 2%, and so rallied back quite a bit. The S&P 500, we'll pull up SPY here. That was up 0.13. So that was also down 1.3% intraday, closing at the top of its range. It got into positive territory at the close. The Dow Jones Industrial Average, let's go ahead and put DIA up there. That also closed in positive territory, about a 0.16% gain at the top of its range. And finally, the IWM Russell 2000, that had the biggest gain with 0.37%. Again, closing at the top of its range. That was down 1.6% at its worst. So, Mike, it felt like there were a lot of these upside reversals that were going on in the market, and kind of luring you in, and then boom. It was like the rug would get pulled out from under you. And we love upside reversals because they can really help you manage your risk. It kind of gives you a nice fine line in the sand where where you're wrong. But man, if you were doing too much buying, then you ended up having to do a lot of selling because the market was telling you that those upside reversals weren't working. So do you believe this one, or are you cautious?
Um, I believe it until today's low is taken out.
Hmm.
Because that's what an upside reversal is all about. It always they happen in this way that is very frustrating, right? Because typically you've just sold, and lots of times, you've sold bottom tick of that day, and you have to, right? Because you have to do your selling as your stocks or ETFs are hitting their stops, and you try to give it as much room as possible. But at some point, you got to be pulling the plug, and that's typically everyone is pulling the plug at that point. And if it's just going to be a normal pullback, that's when you get that upside reversal. And then you have to switch gears from defense to offense. And it's really hard. I mean, it's hard for everyone. It's hard for me too, but you you have to do it because it's just part that the best time that you have an edge using our style, the general IBD methodology, and there's all sorts of variations, whether it's short term swing trading to long term position trading and everything in between. Your best entry is on an upside reversal because you have a very, very clear expectation of what it should do. It should hold that low and it should move higher almost immediately. Sometimes you'll get an inside day the day after an upside reversal, but typically you get a move higher. And then that gives you a little bit of a cushion, and then you can add to things. So that's what we had today. And I threw out the last of my SPY position somewhere near the lows of the day, and I'm like, as I was selling it, I'm like, yeah, this is my sacrifice to the market because it'll
Hmm.
probably turn, and and it did. And then you just have to adjust. It's frustrating. Like anyone who says it isn't frustrating, they're lying to themselves, to you, to the world. It's been a hard game for the last month or so. But
Yeah.
when that's the case, what do? Now, not so much if you're just a position trader with really low cost basis that you're letting things wiggle and wobble around. Like those people, like, yeah, it's like been a great environment for them. But if you're a swing trader, this has been, at least my style, has been tricky. But you go
Hmm.
back to your instruments and you say, okay, what are my instruments telling me right now? So my main instrument that I use is the 21 day, which is the green line on there. Our high is now underneath that. That's a bad thing. The Another instrument that I use is the 50 day, which is your red line, and we got clear support there. So, there there's like a
The
plus one and a
balancing.
minus one, right?
You're not doing 6-7. You're balancing. Yes.
I don't know. I've heard the 6-7 thing. I don't know what
Don't
that
even start
is.
down that road.
Okay. Yeah, no, Leif mentioned it when I saw him in Florida, and him and his wife were saying something about a 6-7 song, and I was like, I don't know what you're talking about, and they did not believe me. I don't know what it is. But it's okay. It's clearly not a 5150 song, so I don't really care about it. The next thing is, speaking of numbers, is the 673 95, the last marked high that we had. Those are very important. It's something that Justin and I studied along with Charles Harris when we did the market school rules back in the 2011 timeframe. That when you go below those, that's a sell signal, and we had that. So we went below the 21 day yesterday. There was a sell signal. Went below the marked high. There's a sell signal. Whether you're using the Nasdaq or the S&P. Um, and so certainly negative. We want, if we get a close back above it, then that negates it and then it becomes a buy signal. And then you want to be buying if we get a close above the 673.95. But there's lots of mixed signals here. But I think there's a constructive way to look at the market. And this is, if Bill O'Neill, the founder of IBD, were here, this is how I think he'd be looking at it. Is that this is the potential second bottom of an ascending base. So your first bottom happened on October 10th, then you move up to new highs, then you pull in and you have a second pullback, but that pullback needs to hold above the low of the first pullback. So the 1010 low becomes a critical level, and you don't even want it to get really close to it.
Hmm.
This is about as low, a little bit lower would have been fine, but not after an upside reversal. So this is as low as it should get. If that's going to play out, then it rounds out, goes up kind of like a mini, tiny little mini cup, a couple weeks or so sometimes, um, goes up to new highs, then has another pullback, and then that pullback is higher than this pullback. You can't tell the market what to do, but what you're always looking for is what would be normal and natural. And that's what Bill would do, and that's how I would do it when you're looking at something going, okay, what would be normal and natural? And an ascending base would be that. Now, last week, we were talking about, both on IBD Live as well as I think on this show, or maybe it was a week before as well, that I was looking at this as being the potential last little run in October of 1999. We don't have to go there, but basically it was, we broke out to new highs and never looked back, and you were always waiting for that pullback, pullback, pullback that never happened. Well, it's actually good that in the short term, that would have been really nice to have just a ripping rally to just push it as hard as possible to the end of the year. And that would have been great, but it would have meant we're closer to, a lot of devastation, because when something goes in a climax type of action, even to resolve itself, it needs to chop around a lot.
Hmm.
So we have had some good action here where it kind of deflated some of the air out of the bubble, so to speak. We're in a bubble, right? We just don't know where we are. Are we in the first year of a 10-year bubble, 20-year bubble? Are we in the last year of a bubble? And you've got to decide where that started. You don't know, but you're in a bubble. But you use the charts as your gauge. You don't go, oh, I'm in a bubble, so I'm going to start shorting. You just let the market tell you what to do, and it's healthy if you get the fear out there. And there was a lot of fear, and there should have been, because a lot of the high flyers were falling like rocks.
Hmm.
Can't think of any off the top of my head, but maybe like an Oklo that
Yeah,
a
that's
lot
what
of
I
us
was
were
thinking of.
trading.
Hmm.
You
Hmm.
know, had a nice upside reversal today, but it's underneath the 50-day, so not in a position where I like to buy it. But and that's so far off of its highs, but that's actually a good thing. There's a lot of, and this is probably the best one of those highly speculative stocks that came down and didn't end up, going back up. And so you want that fear in there. Yeah, here's another one, and I think it kind of Palantir that happened this week. The earnings on that one, I think that was an important time because it basically, from what I could tell, the earnings looked good and all. Maybe they didn't beat as much as they have in the past and all of that, but you had this negative reaction, but it didn't blow apart. It's trying to find support in here, and there's all that debate about the valuations and stuff. I'm not going to get into that because that's a big topic. But what's nice is it looks like it's getting support. You don't want a key stock in the theme, to be blown apart and underneath its 200-day or something. And we saw a lot of stocks getting just killed this week, just blowing apart on earnings. That's a good thing because if you get junk stocks that are still holding up on poor earnings results, that means you're more in that bubble where everything is just going to go up no matter what, and then there'll be a day of reckoning, and we don't want that day of reckoning or years of reckoning like we had in
Right.
1929 to 1932. Which I will say again, I think I've said it on this show. The 1929 book by Sorkin is really, really good book. I mean, I think an excellent book. I think he's done a great job. I just have a couple chapters left in it. But there is also that. There was the 2000, 2002, the '07 to '09, and we don't want to have to deal with that. So we've got support here at the 50-day. We will see what would be normal and natural in a healthy environment would be to get back above that 21-day within the next couple days, frankly. But certainly holding up above the lows of today. If we roll through the lows of today, man, it's at least a magnet for the 1010 low. And below that, you don't really have much until the 21,800 level, which is, and then basically I like to look at each marked high and each marked low as a
Hmm.
stopping point. There are exceptions to that. And then, of course, you've got the 200-day way down there. And, that's always in the cards, but we'll take it one day at a time. But today was constructive, but it has been really, really choppy from a swing trading standpoint for, God, probably like 5 weeks now at least.
Yeah. I mean, really, I mean, since that 1010, right?
Yeah, since 10:10.
October 10th, that kind of was a shot across the bow. And there was a lot of, okay, how do we handle this? You kind of needed the market to go one way or the other. And, we thought it was going to last longer. It didn't. In terms of that sideways action, when it did break to the upside, you kind of had no choice, right? It was one of those things where, you can't sit on your hands and just say, I'm going to be in cash while the market makes highs. That's just following the market, right? And we're trend followers. We follow what the market does. We don't try and predict exactly what's going to happen. But speaking of predictions, again, with an upside reversal like today, you would expect kind of some carryover
Yeah.
the next trading day. So Monday, you've talked about this on IBD Live quite a bit. You hate the Monday gap ups, right? So because there's so many fades and everything like that. So how do you handle Monday? What is it that you're looking for, and what gives you concern? I mean, as you said, if this kind of was an inside day and just kind of chilled out, with holding that low of today, that wouldn't be a disaster. But the ideal situation is you start making some progress, right?
Yeah, if I don't like gap up Mondays, but in a position like this, I would actually be thrilled with a gap up Monday because
Hmm.
I would follow your expectations. And as long as we hold, regardless of what happens on Monday, because you never know the news flow over the weekend, and you've got to put that in there. Like you you have a thesis that a certain type of open would be good or bad, but the news flow is going to move that. So it's just, if there wasn't significant news, you would want, a gap up, probably above the 21 day, and just moving, not looking back, catching the people who were, would have gotten short or hedged this week. And I totally get that. That style and doing that, frankly, makes sense. That, those people will have to close out those trades, which is more buying pressure. So I would expect, in a healthy environment, a gap up on Monday. If we are healthy, a gap up, go up. Um, we'll see if we end up getting that. But like you were saying, as we went up through new highs as a trend follower, you had to get exposure. You can't fight it. And then as you go through key levels, and for me, it's a 21 day, you have to be backing away. When you get down to your 50-day, you have to be backing away as well, even hoping that they get support there. So you just have to, like, follow your rules and realize that it's not about any single day or week or month.
Hmm.
It's about the process. And I think you talked about that on IBD Live this morning as well, or earlier this week. And I totally, agree with that. It just, disconnect yourself from any individual outcome, good or bad, and just look, is your strategy make sense for your personality? And then just follow it.
Hmm. Makes sense. Okay, well, let's shift gears a little bit and
Oh, can we
talk.
look at RSP as well? We
Oh
didn't we
yeah,
didn't we didn't pull
we
that one
definitely
up.
want to do that before we go further. RSP, another upside reversal. This one, a much stronger gain, 0.84%. So really kind of sticking out in terms of, I mean, as we mentioned, the Russell 2000 was also pretty strong at 0.5%, but RSP taking the cake there.
Yeah, and I like looking at this one because I don't think a lot of people do use it for their measure of breadth, but I do. And this is another mixed bag because it hasn't really been doing anything for, a few months now. It's just been going sideways, telling you your average stock is going sideways, whereas the heat that isn't part of the S&P 500, that was what was ripping, and then that was what was coming down, and then your mega caps are really what has been driving this market for a few years now. So this has just been base building, and I do really like how strong it was today. I mean, for this, and look at that RS line over the last week. It's your average stock has been moving up, and in general, this one, well, go to the monthly chart, because you'll just see the general trend of the RS line for RSP is always going to be down, with the exceptions of little pockets, until the day comes, or the decade comes, where the mega caps are no longer driving the market. When they become a drag, then that'll shift. But I don't see that anytime in the near future. But I hope I'm wrong, because that would easier market if it wasn't just the mega caps that end up always working out. But let's, one more thing until we go to the other stuff. Let's just pull up Meta, for example. And when you, I would suggest that folks look at all of the biggest market cap stocks, maybe the top 25 market cap stocks on a daily basis, to see, on balance, the ones that are falling apart. Do they have a lot further to go? Are they finding some support? And it gives you a sense, if one by one they're all rolling over, that's when you've got a serious problem. But for every time Meta is in this position, at least has an upside reversal, and hopefully it bounces up to the 200-day. It's a broken chart right now, but um, then you have a Google. Like, I know Google didn't have a great day today, but let's look at that. This one counteracts it. And if you just go through all the mega caps, they kind of are counteracting each other. But there's some new ones coming through, like a Lilly. Let's just pull up Eli Lilly for a second. This is a kind of a sleeper mega cap, and let's go out to the weekly. And I really like that. We've been talking about this a lot on IBD Live. David Ryan brought it up. I've been bringing it up. I do have a position in it. This earnings line is just smoking. going straight up. And so it's nice to see that there is a lot of other ones. And let's pull up Amgen, which looks like it's coming from the dead, back from the dead. And I do have a position in this as well. So, some stocks that have been left for dead for a long period of time, the big institutions could rotate into those and then allow the mega caps. Like, let's pull up a Microsoft on a daily that's been struggling recently. So if that is in a basically a breakout failure mode, I mean, it could come, although it could stop here, but it could also come down, easily come down to the 200-day and kind of be in a weak position like Meta is. You want someone else to take the baton. So again, the takeaway there is always look at the top, maybe 25 or 50 by market cap. And that will give you another sense of the general market, and if it's healthy or not and where the money is flowing.
Hmm. And I should mention that we will get to some more stocks. I didn't mention that at the top of the show, but we will look at some more medical exposure, including Intuitive Surgical. I do have a position in that one.
So do
We'll
I.
look at some travel with Marriott, and also I think I do have a position in that as well.
I
I
think
was
so
I was doing
too.
some buying at the
Yeah.
end
Yeah, me
because
too.
we had to wait for our restricted period, and then also in aerospace defense, Carpenter Technology, CRS, and I do have a position in that as well.
Yeah, me too.
Um, okay, so let's talk a little bit about the sectors as we typically do. We'll go through these with the worst first, but it's worth noting not just how bad was it, but where did it finish in relation to its trading. And so SMH, which is the chips, the Van X semiconductor, this was down almost 0.9%. But look at that, closing at the top of its range, didn't even come down to the 50-day moving average line. And while it's still below the 21-day moving average line, really made up a lot of ground. If you look at this marked high on SMH, it looks like we are just shy of getting above that. In fact, in after hours, it looks like it might actually be above it. So that's kind of interesting. What's your take?
Yeah, this is one that we were playing on Swing Trader, and I was playing it and had to exit it and everything, and it looks um, frustrating, right? Because it shakes out, but it doesn't come all the way down to the 50-day, like you were saying, as kind of your classic buy. But sometimes your stronger ones are don't ever reach that level. Pull up TSM um, for a sec, and then so that is more what you'd expect it to actually touch the 50-day. So if I were looking at this space, this one, the earnings are already behind you. I'd be looking to, buy this one with using today's low as your exit. And, there's a ton of other ones in that same space rather than going with the ETF this time.
Hmm. And for those that were watching IBD Live today, we had Matt Caruso on, and he was talking about Teradyne, and kind of some of the things that it does in the semiconductor space. But yeah, that's an interesting
He was so
looking chart
great on the
there.
show.
Oh yeah,
What he's been
he's
on 15 times now,
yeah. I
I think
think
they
that's
said.
what David Chung said. Yeah, and he's been on the podcast a number of times. He's one of my favorites. The first time I ever did the podcast on my own, Matt Caruso was my guest, so he was easing me into the stuff.
Oh,
Um,
that's wonderful.
technology sector, XLK, nice support at the 50-day moving average line. Again, it was down one of the worst today, but with a 0.35% loss, and finding support as it did off the lows, a very good look for that. Q's about looking the same as that, with the support at the 50-day moving average line.
I do have a
ARC,
position in the queues.
K, that is, yeah, I have a position in the Q's too. It's a futures position. ARC Innovation, this is below the 50-day moving average line, but I guess back to your point of these marked highs, it did get a little dip below there and got support there. So that's interesting to see. XBI, we've been watching this one very closely, the biotech ETF. That got support right there at its 21-day moving average line. Undercut it, so just enough to shake people out, and here we are back above that 21-day moving average
Yeah,
line.
it shook me out, but I did end up buying it back late today.
Hmm.
We'll see.
XLC, as you mentioned, you already covered Meta and Alphabet, the two biggest components in there. This is still traveling below its 50-day moving average line. Relative strength a little bit, a little bit ugly there. FNGS, as you mentioned, this has got the mega caps in there, the Magnificent Seven, or I think this is 10 stocks in there. That got support right there at the 50-day moving average line. QQEW, this is the equal weighted Qs, the Nasdaq 100. Below the 50-day moving average line, but reversed quite a bit and made up a lot of ground. And so now we're also in the flat territory. So everything else from here actually closed up. So SPY, as we mentioned, that was up about 0.1%. XLV, the medical, you mentioned a couple medical stocks already. We'll get into some more healthcare sector. This was, this just didn't look affected. This it's kind of like what ugliness. This has just been kind of going sideways with some very mild action, not nearly the intraday volatility that we've seen in the markets. And one of the things you and I have been talking about, we were kind of doing some quick correlation calculations and stuff, and there were a lot of the medical stocks that were coming up that you started with, okay, here are the charts that look good. Now let's look at the ones that are most correlated with the markets and least correlated with the markets. And this was a space that has some interest.
Yeah, I had the most that I was noticing, and I love that you built that correlation thing. It's so helpful. It's so great working with you. I don't think I've ever said that before. Um,
Right, maybe.
but it's true. That's why I say it so often. But this is my favorite sector to go in right now, just because we don't know if is this AI thing. Does it need another month or two, or week or two, or day or two to kind of settle down or simmer down? And so what we can do is, rotate into other spaces like the defense space, as well as the healthcare. Those are the two areas that had the most interesting charts
Hmm.
today.
Yeah, no, very, very interesting stuff there. And uh, I guess there is a concern because as well as this held up, you also have to kind of consider, okay, where does the money hide, right? When they're scared. And medical tends to be one of the places. We're going to get to the staples a little bit later, but I mean, this was a strong, one of the strongest moves, a 1.5% gain in the staples. Is this money hiding in the medicals
Yeah. No, no,
and
no.
staples?
I think that there's a combination. So there's the UNH ones, like let's pull up UNH, where that's not in our style of trading, right? But there was a camp of, a lot of high profile people that were buying it, well underneath 300 in doing a value type of play. But so a move like on this is kind of disconnected, and that's I believe the biggest component in XLV, or at least it was at one point, versus going to the staples. Like think of like a Coca Cola. Let's pull up Coca Cola for a sec.
So it looks like actually, I just pulled up XLV, and if what I'm looking at is correct, Lilly is
Oh, good.
overtaken UNH now. So XLV has a 14% weight in Eli Lilly. Johnson and Johnson comes in next at 8.5, and AbbVie comes in at 7%. UNH is down to 5.5% now.
Oh, wow.
This is coming from a sectorspiders.com sector tractor that I
Okay,
look at for
that
some of this
that
stuff.
that's actually great, because the Lily is probably my favorite one in this space of the megas.
You were looking
Um,
for an ETF with Lilly. Hey, there you go.
yeah, that's what you and I were looking at today. We were trying to find like who has the biggest one, but all of them just didn't. The ETFs didn't look right. But we're just trying to figure out a way to get this on swing trader really, and you can't do it on the first day down after a move. So you look at this, and this doesn't look like they're hiding into it, because each day going up, regardless of what the market was doing over the last week or so, to me this look. Go to the monthly for sec. You know, it's had the history of having such long moves, and then it's had this really long base on a monthly. And this feels like, regardless of what happens with the AI thing, this one could have a huge move. We will end up seeing, but going back to the staples, let's go to the XLP on a daily. I haven't pulled up, or actually, let's go to like a Coca-Cola or something like, a classic staple. That feels like hiding. It
Hmm.
doesn't look like, you know, you did have a nice reaction on the earnings, but the earnings were, pathetic at single digit numbers, a little acceleration, but still. And go to the monthly on this one to contrast the two. So this look at that RS line historically. It's just a place where big institutions can go in and hide and, hang out with Buffett. Like
Hmm.
there's nothing wrong with, people are always going to drink their Cokes and related products and everything, but that's not at a growth stage, a monster beverage or something like that. That's something where, that we would trade when it's in position. But yeah, so I think the XLP was hiding versus the XLV, there's a rotation,
Hmm. Yeah.
if that makes sense.
No, it totally does. And Coca-Cola is the fourth largest weighting in XLP. So it's got about a 6.5. Yeah, 6.5%. Walmart and Costco are the two largest at around 10%, and then you got Procter and Gamble at about 8. So back to our sector list, we went through XLV. How about IGV, the software? There are a number of software stocks that are looking interesting. This is a very kind of diverse field, and of course, IGV, is probably being bogged down by Microsoft and some of the larger components there that have not been doing as great. So you might have to do a little bit more of the um, searching for the best stocks in this group as opposed to the ones with the heaviest weight. Because I know, well, actually, you know what? Palantir is the heaviest weight now
Hmm.
in IGV. But Microsoft, Microsoft is next. CRM, which that's been struggling quite a bit. Oracle. So IGV again does have a lot of that dragging it down. XLY, this of course is the combination of Amazon and Tesla that
And I do have
combine.
both of those
They
stocks.
combine for a yeah, 40% weight in XLY. One of the things we've been talking about is RSPD. The equal weighted version of consumer discretionary has been uh, quite quite underperforming. So yeah, that's getting support at the 200-day moving average line and had a good day today. So we'll see if if the consumer gets back on track here. Going through a few more of the sector spider, XLI. Also, that had a move back above its 50-day moving average line. Gold, GLD, this, had a nice move here coming out of this base, pulled back, but you made the argument last week, I believe, that hey, this might not be dead yet.
Yeah,
So
I don't think
right there at
it's
the
I don't
21.
think it's dead. I know that there has been a lot of high profile folks who are saying that it's over and done and everything. Go to a monthly. My take is that when a commodity goes on a trend, they go a lot longer than folks think, and it kind of just got ahead of itself, and you can see that on a monthly chart. So pausing, let's go to a weekly. It just got ahead of itself, pullback, normal and natural pullback to the 10-week line. Like that to me is just saying, look for an entry point. Like not that it's done. I think sometimes folks just focus on the daily chart and not the weekly and the monthlies when they make these types of calls. But we'll see. It's I would buy it if it takes out the highs of the last couple weeks,
Mhm.
and give it a shot that way, and then probably use the low of this week
Yeah,
as a
makes
stop.
sense. XLF, there have been some money center banks that have been looking interesting. JP Morgan, was probably one of the better looking ones. Morgan Stanley, that one was getting supported. It's 50-day moving average line. KBWB is one that has a lot of those big banks in it. XLF, a little bit weaker. That's below its 50-day moving average line, partially being dragged down by, Berkshire Hathaway. Although that looks like it's, you know, picking up a little bit, so that'll be interesting to watch that. ITA, this was another area that kind of got identified as an area of, hey, this is something to watch. And it's not like this hasn't participated. I mean, you look at the move of ITA, this aerospace defense, since April, and this has absolutely been participating. But it seemed like there was a lot of strength here. 0.7% up for the ITA. What do you think here?
I was when I was searching for because we had gotten very light on swing trader because that's what we had to do. We were trying to hold some things longer than we should have, SPY included, and finally, threw it out at the lows. But then I was looking for when things firmed up, I was looking for what we could add to the list and just doing through my normal screening that isn't specific to a sector or industry. I just look at everything. And it's just one by one, I had like 4 or 5 names in this space that looked good, and I was just like, "Let's just go with the ETF," because there's a lot in this, area that are in position, and then you have an easy stop because your expectation now is you've come down for 2 weeks, uh, on that level, and then had the major upside reversal at the outside day, upside reversal at the 50-day. If you're going to give it a shot, that's where you give it a shot. And then if it takes out the lows, then you have to back away.
Mhm. We already talked about RSP and what's going on there. NLR, the uranium and nuclear, we had this on our list, but as you mentioned, a lot of these were going nuclear and fell fairly hard. But a nice upside reversal
Yeah.
today that
So
was up 1%.
to me, that looks like the second bottom of a double bottom,
Hmm.
like a very short one. You had your first bottom at 136.56. This is your second bottom. And unless you're going to use a shakeout plus three or a move back above the 50 as your entry point, that the going above your horizontal line there, your top one, that would be, kind of a classic entry. Probably getting in before then because that's a mile from, up from here, but it doesn't look like it's over yet.
Hmm. Yeah, making a good point there. XLB, the materials, that is also kind of
By the way,
suffered.
this is the first time if you see me looking over here, I've figured out how to watch the YouTube comments. So like I
Aren't they
really
funny?
dig that people
I
are
love
watching
the
it.
YouTube comments. I
Yeah.
mean, we brought up some music at the beginning, and everyone was talking about all the concerts that they had gone to, and yeah, the comments are great. And there's a whole. Sometimes it's distracting. I'm like,
Yeah, I'm trying not to look. I could see it's like, wait, I'm supposed to be doing a show, but I'm
yeah,
watching all
right.
these comments.
And sometimes there's a whole soap opera going on there, like, oh, hey, how's this going with you? And this, you get to find out about all the lives of our audience, which is just a lot of fun.
Well, just
So,
for the YouTube folks, who do you like more, Sammy or David Lee Roth? And I will block you if you give the wrong answer.
uh-oh,
So, yeah.
I think Tim already might have gotten a block then. So,
Oh,
um, XLRE, another place where typically folks, institutions tend to hide. This had a strong day, up 1.3%, but still below its 50-day and 200-day moving average line. Of course, one of the things that has been notable here is the 10-year Treasury yield, and how much that went up. That certainly was putting some pressure on there. But man, sometimes that stuff just doesn't correlate the way you expect it to.
yeah.
XLU utilities, kind of like nuclear. This is an area that has been really participating, the AI adjacent. Really strong day today and back above the 21-day moving average line, kind of clearing this tight area, really held the low, that it made, earlier this week. So kind
We
of
almost
interesting.
added that to Swing Trader today for all the reasons that you mentioned. Looks perfect. Frankly, we ran out of time because I was trying to decide between some different stocks or ETFs, and it was just we just ran out of time. I think this looks, really like a great entry, like the best entry we've seen in it for several months.
Mhm.
So I think that looks really good.
Yeah. KRE, we already talked about financials, but the regional banks, finding a little bit of support right there at the 200-day moving average line. XLE, This is back above its 50-day moving average line. It's been some choppy action here, but did get support at the 200-day moving average line. So that's something to watch. We already talked about XLP, and then rounding out our sector analysis look is GDX, which we already talked about gold. Oh, one more that I should add here. The top spot belongs to Bitcoin. iShares Bitcoin Trust IBIT. That is still below the 200-day moving average line, but that ended with a 2.8% gain today, well off its lows, and it did seem to just kind of test that earlier low of this week. So any comments there?
Yeah, so I'd say with the IBIT that it's finally at least giving you some sort of pattern, right? A double bottom where this is your second bottom, where you're, if you could just point to where the middle would be. So, um,
So are you talking about the
yeah,
for a
so
double bottom?
71 to 59 is your first bottom. You go up and then, yeah. So now at least we have a place to look at because before it was just in a downtrend. Now it's trying to stabilize here. It gives you something to look for if you're going to buy it, or you could use a shakeout plus 5% or shakeout plus three, depending on your terminology, using the 59.31 as your level, so 5% above that. But it's in no man's land right now. It's just it's base building. Let's look at Ethereum
Hmm.
for a second, which had more damage done. I think there was a needle involved. Sorry, it's Friday. This one looks like a broken chart, right? You could still say that the 3205 is your midpoint of your double bottom, but it would be a really lopsided one. So more of a concern to me because when the when the crypto space is hot, then it seems like it flows. People are making money there, and they're more loose with their money in the stock market. So I do think that they're connected, and I think a lot of the pullback that we saw in on the stock side was driven, at least in part, by the sell-off in the crypto space because that's pretty severe from 36 on down to wherever got into like mid to low 20s or 24 or
Yeah.
so.
I mean, this low right here, 2365 is how low it got. So yeah. Okay, let's talk some stocks, and then we're going to go through the Webby charts. Let's start with, as you mentioned, a lot of medical looking interesting. ISRG, I do have a position. Really strong move up above its 200-day moving average line, and then it just held really nicely. So yeah, this is one that we've been talking about for a while, and a nice breakout above that 552. Not quite 5150, but it's kind of close, right?
Yes.
552.50, something. So what do you think here, Webby?
Uh, I do have a position in it. We made it our biggest position on Swing Trader. Really, really like this setup. So let's go to the monthly for a second. Um, And on this one, what I like about it, it has been a model book stock many times in the past. That's something that Bill would always look at and see, has this stock been able to have a huge move in the past, or has it just been a, laggard? And this has had some massive moves with their whole Da Vinci product and everything that, when it first came out, it was very revolutionary. Now, it's got time under its belt. So people, I think, feel more comfortable with it, and now it's just been base building. Go back to the monthly just for one more second, because when I say base building, I'm also it's in terms of the RS line, because that RS line has just been base building for a long time, just kind of just going sideways in there, and it looks like it is ready to, it's just been hibernating and can have another move higher. Now let's go over to the weekly for a second. And again, while everything else has been running, this has been having trouble. Let's go down to the quarterly numbers and see what we've got there. So some acceleration in both the earnings and the sales. Not, it's not dramatic, but it is there, and that was a big deal for Bill. I've studied it. It is a big deal because it's kind of an inflection when you get both of them going. This is set up to have a monster move. Doesn't mean it's going to. So you want to know where you're wrong. Let's go to the daily to see
One
where.
thing I just wanted to point out on the earnings is this also, 18% earning earnings per share growth rate, 18% annual, is, it's okay. It's not spectacular, but an earning stability of 8, that's kind of reflected in this earnings line. That it's just got very stable earnings. It just performs, grows just quarter after quarter very steadily.
Yep. Well said. So with this, if you're a position trader, you could give it a little bit more room and give it to the lows of last week. Or if swing trading, you would be a lot tighter. The lows of today to exit some, and the lows of yesterday for probably the rest of it. But this is how they look when they've been hibernating, and then they're ready to do another move higher. And I liked how it was acting in a bad tape. It was, wasn't wanting to go down. So this is probably my favorite new old stock
Hmm.
um, right now. That
Yeah.
and Lilly, frankly.
Right. Yeah. It's sometimes it's not about going to the brand new shiny object. Sometimes it's about the old faithfuls. Let's go ahead and also take a look at, speaking of kind of an old faithful from way back when, Marriott International. A number of travel stocks were kind of looking interesting. I didn't have this in the sectors today, but jets is something that we typically look at in the travel space. But this is more like, some of your hotels. Expedia had a really strong move on earnings, but let's take a look at Marriott, which earnings are behind it. It just had earnings, kind of popped out above this, resistance area, and has done a nice follow up, and kind of breaking out of the space now.
Yeah.
Poorly drawn
So
line there. Sorry about that. Let
it's
me try
okay.
again.
I knew what you were doing. You can't do everything right, Justin. Let's go to Expedia for a second. And boy, I just looked at the time. I must have been chatting too much. Sorry. So when you get a big stock like this that moves on earnings, you always want to look at the rest of the group to see if something's in more of a better position. Obviously, this is much stronger than Marriott with the move that it had, but it was just out of a, out of position to be buying it in the type of environment that we're in right now. Let's go back to the Marriott. Um, I'm not in love with Marriott. I stayed at a Marriott yesterday. It was okay. Same as a Hilton. Same as like I don't have any like. It's like whatever is the best deal in the right
Yeah.
location. So I haven't noticed a material difference between Hilton or Marriott or some of the or Hyatt's or some of the other ones. But it looks good. The earnings aren't that spectacular. They're pretty pathetic, frankly. But at least it was breaking out of a base. This like another kind of like those other ones that we were looking at is it's been going sideways for a long time. So it has a springboard that it can go up from. And I really like how tight that base is. There was one in
Just 11%. Yeah.
yeah,
Depth.
all those tight weeks in there on a weekly basis almost look like it's a stock that's going to be acquired.
Yeah.
And I think Bill had one of these in How to Make Money in Stocks. It looked super, super tight forever, and then when I can't remember. I think it started with a D, but I could be remembering it wrong. But
One of
um,
the was it Dollar Tree or Dollar
might have
General?
been,
One of those. Yeah. I
yeah.
mean, like it looked
It
like it
was,
had been acquired. It was
yeah.
that tight.
And
Yeah.
then it had that move, and maybe it was being acquired, and then the deal fell through or something. But
Mhm.
when you have a long, tight base like this, it's something that it can really move up from, and we'll see. But the earnings are pathetic, so
Yeah.
it's more of a swing trade.
Mhm. We'll wrap this up with, and I do have a position in
Oh,
Marriott. I, I
I have
I
a
think I
position
just
in
bought a
both
little bit
that
of
and
that.
CRS. Yeah,
Yeah, and then I also have a position in CRS. This is one that we had on Swing Trader earlier this week, and we survived. So this got an ad today, but strong move on earnings. Pulled back a little bit, and now it looks like it's on the move again. It kind of reminds me a little bit of the move that we saw from MDB, where it kind of goes up, goes sideways for a little bit, and then starts moving again. That's actually what I wrote my column on this week. But back to CRS. So as you mentioned, in the aerospace defense area, and these guys are specialty alloy metals. That was the group that they were in before. Now it got moved over to aerospace defense, but really strong reversal and powerful close.
they deal with heavy metal.
Yeah,
I'm
something
not
like
sure.
that.
So I really like outside days. So meaning we traded below yesterday's low in a significant way and above yesterday's high in a significant way. Like there's always, you see a lot of outside days, but is this marginal. Like this one, you don't have to use a track price or anything. It's clear. We
Yeah.
traded outside of it. So what does that mean? It means it shook out anybody that was had a really tight stop on there, reversed, and then powered through. There was enough true buying power there to push it through the prior day's high. I love those because you treat them like an upside reversal. That low of the day ends up becoming, a very clear line in the sand. So if we travel below today's low, we'll back out of that position. But this is normal and natural. You have that big move up on the. How much did it move up on the earnings? The gap
So
up
that
big day.
day was up 22.7%.
Yeah, so massive, and then still moved higher and then pause. Like this is an ideal setup. Doesn't mean it's going to work, but the odds are on your side, and that's why we, increase the position, and it has the group move behind it. So we'll see.
Yeah, a nice combination. So, Mike, you ready to share some charts?
Yeah, I'll be fast.
Okay. Let's turn it over to you. Sorry, folks, that we've gone a little bit late. We were just watching all the comments and
Yeah, just
um,
having some fun.
yes,
Um,
exactly. And there was a lot to talk about this week.
mm,
Upside reversals. Hey, it's a day where you really want to be paying attention. So go ahead, take it away, Mike.
so this is our Bob Weir take a step back, look at the weekly chart, and this is going to be the first. If you're relatively new to the SMTs, we go through a bunch of charts in this next segment, and what you're trying to do is paint a picture of you're going to see some things that are negative, some things that are positive, and to try to get a sense for how negative or how positive it is. So with this on a weekly basis, obviously, having a big pink candle, that means that you closed a lot lower than you opened for the week. That's a negative. But on the positive side is you get a really long bottom wick on there with no top wick. So the bottom wick means you travel down below there and then close up well off your lows. So although it's a negative candle, it's clearly a negative candle. That bottom wick is meaningful. It also tells you that the this week's low is an important line in the sand. If you go below that, then you're most likely, you've got to go lower, or you should go lower.
Mhm.
And kind of a similar thing with the Nasdaq. It it just when you look at this, you've got to ask yourself what would be normal and natural. A lot of things, going down, having an inside week, just staying between the high and the low of this week would be normal and natural. But it doesn't give you this expectation that you're just blasting off to new highs. And it also doesn't give you the expectation that you're falling apart. If we were closing at the lows, like we did like 4 weeks ago, your expectation is to move lower. It didn't, because of the news flow, but that was your clear expectation. We'll look at IWM. And this one had much more of a shakeout, and you can see the shakeout below the October 10th low, and it was able to move up. So that one actually looks better than the other ones from that lens. Now let's go over to our original regression channels that we had. These are the ones from going back to the May timeframe, the May 12th, and then we went out 50 days from there to the July 23rd. And we put this one to bed several weeks back because it was living underneath the green line over here in around October 14th or so. And so we threw that one out, and we did the same thing with the NASDAQ. But at that same time, we went ahead and put the IWM on there with a different date. And that was the August 1st was our one anchor point. And then the second anchor point 50 days out was October 10th. And so with this one, about
And
two or
just to be clear, we didn't choose October 10th because it was such a critical day. It was because it was just 50 days past August 1st, 50 trading days.
exactly. And then this one, after you were living it underneath it for several days, certainly on this day on the fourth, you had to throw that out. What do I mean by throw it out? Meaning not that the market is going to fall apart, but that trend is now decisively broken, and you can't use that trend. Now you're looking for some new anchor points because it's too far away from there. Now let's use those same dates that we use the IWM, but let's use it for SPY and NASDAQ. This one was really setting up a
Hmm.
couple days ago where it looked like, if you've never watched this before, the key thing to look for is when you go through this green dash line. That's just your minus 0.75 standard deviation. Don't worry about that. What it is when it goes through that line, it wants to go back to its regression line, or a line of best fit, which is your white line. I like to call it home base. It wants to mean revert.
Right.
So now at this point, we're not so far underneath. Well, we're very far underneath the green one standard deviation solid line in terms of price, but not in time. If we were under here for about 3-4 days, we would have had to throw it out. But this now can get back in there, and I would still use the same level, the 0.75, which is this green dash line. If it gets through there, then you're looking at wanting to gas it, because then you should be traveling up there. We will see how that plays out. Same thing for the NASDAQ. Again, this green dash line right in this area, that's where I'd be gunning it. We'll move over to our 50% retracements. I changed these from the October 10th to the October 10th low and our recent highs, and we pretty much closed right at our midpoint. We want to live up in the northern hemisphere. We'll see how that plays out. Same thing with the NASDAQ. This one, we are underneath it. So that's a negative. So each one you just have to be objective and say, is it positive or negative? This one is negative underneath that 23,100 and change. So we want to get up in this area. Let's see about the IWM. That one's the worst. It actually took out the October 10th lows, but with that upside reversal, looks like it wants to go higher. Our next chart, this is our levels chart. I put a green dash line on here for the first time in a while. That's marking a level that we wanted to get above in the very short term. And so that is, your highs that you had around October 9th and October 10th, to get back above that right away. And then today's low becomes a very important level. And then the October 10th low is also extremely important. And the same basic thing on the NASDAQ, just using the highs from October 10th. And then those, I could have put a line here as well at today's low. I just ran out of time. IWM, it went through the October 10th low. That was our warning level, but it is trying to get support there. So we'll see how that plays out. Our next set of charts, these are all of our moving averages. I find this very helpful to tell you, to in an objective way, to let you know, are you in a nice trend or not? And so I just use very short-term moving averages to longer-term moving averages. And I choose to do them using Fibonacci numbers. That's just kind of one of my things, because it breaks them out in a nice, even manner. So you can just Google the Fibonacci numbers, like 3, 5, 8, 13, 21, and 34, 55, 89, stuff like that, and just plug them in, or use your own. You use a 3-day, a 5-day, a 10-day, a 20-day, whatever you want to use. But with this, what I'm doing is seeing, are they stacked properly, or are the short-term ones crossing below the intermediate terms, and so on. And that we have a lot of crosses here. So for this to really be out of the woods, you need, the short-term ones, the shortest term ones, to be at fresh highs, and then on down. That's not what we have. Let's look at the composite. Same thing here. They're crossing. So it's just, what happens in pullbacks. Same thing here on the IWM. That looks worse. Ali's favorite chart, and mine too, would be just simplifying it. Just remove all the noise and just look at the 21-day exponential. That's your green line. Is your low above it? Is your high underneath it? Or are you trading between it? Well, our high is now underneath it. That is a very negative thing. Yes, we had a good candle today, an upside reversal, but the reality is, a trend down, how does it start? It starts by breaking the 21-day, then getting your high underneath the 21-day, and then your high staying underneath your 21-day. It's the same thing as an uptrend, but in reverse. So yes, I like the candle. I like the upside reversal, but the reality is, this is a bad chart because our high is underneath it. And then the same thing with the NASDAQ. and then same thing with the IWM, and then same thing with the RSP. So that's those. Let's switch over
Basically, we've
to,
got some work to do, right?
yeah, we have some work to do, but it's not broken. Let me share
Mhm.
the one last set of screens. So we're going to go. Can you see my
Yep, I'm
uh
looking at the Bob Marley.
yeah, okay. We're going to start with the
Yeah, the
hold on.
Webby
I got a
RSI.
cough. Can you
Yeah,
explain
yep,
what that
yep,
is?
yeah. So this is the Webby RSI. This is basically where you are in relation to your 21-day moving average line. That's the histogram, and then also where you're in relation to the 10-day. Right now, because we've been below it, you aren't going to see much here. You're actually getting that orange histogram because we have the high below the 21-day moving average line at this point. So not the typical analysis that you usually will do for the Webby RSI.
Exactly. Thank you for saving me there. Yes. And so you don't want to see orange on here. You want to see a wall of blue or teal. And that is just going to be once our low gets back above that 21 day. Let's do the same thing for NASDAQ. Same thing there. We've got a little bit of an orange one that popped up, but you see that happen. It happened here. It happened here. What we don't want to see is a wall of orange. That means your low is staying underneath your 21 day. And so we will
Although I
see
will
how.
say sometimes it's easy when you see that wall of orange, it's easy to just stay out, right?
Yes.
When you're kind of doing this back and forth, sometimes that's a little bit more difficult because you're like, oh, I need to get back in, and then it's back out, and like what we're seeing right now with the orange line, kind of stopping and starting, right, because of where
it,
we are in relation to the 10-day.
well said. We will finish up with my daughter's favorite one. This is our Bob Marley off high one. And what this does is just uses the low in terms of ATRs. And let's just blow this up a bit. So what this is telling you is that during this trend, I like to look at times of when does it kind of stop at what level. So here, back on August 1st, it stopped around 3.5 ATRs. Recently, on October 10th, a little bit more than that, but now we've gotten worse. So this is another negative because if it would have stopped at 3.5, give or take, that would have been normal and natural and could do that over and over again and still be healthy. This is not healthy. It just calling it the way I see it. That's not a healthy way that looks. Same thing with the Nasdaq. You were, coming along, stopping around 3.75, give or take. Same thing again here, mid-August. Same thing over here on October 10th. Now we've gone into the yellow area, and the green area is 4 ATRs. The yellow area is 4 to 8, and the red area is more than 8 ATRs. And then let's take a look at RSP. That held up better. So that is a constructive sign. It got the worst here on August 1st, and it was a little bit better on October 10th, and now it's actually held up. So that is that's a good sign. But we will see how everything plays itself out.
So next week, a few things that are coming up. Of course, we have Monday that we'll be looking forward to, and then Tuesday is Veterans Day, so the market will be open. But there's a lot of things. I didn't mean to get you started, but the market will be open,
Good.
but a lot of the bond market will be closed, and a lot of things will be closed. It does tend to be lighter trading. Well, and I should also mention that over the weekend, I've got a ton of friends coming for the UCLA Nebraska game. I think we're going to have like a group of 25.
Is it a
Um,
badminton game
yeah,
or
it's badminton, right?
okay?
Exactly. So yeah, if anyone is if anyone is at the Rose Bowl this tomorrow, come by and find me in Lot H. But yeah, so we've got next week, basically Monday, that we're going to be looking at. But what's kind of your idea for next week and how we kind of go into it with our exposure? What are you looking for?
Okay, before I forget, because you brought up Veterans Day, and then I will circle back and answer your question. Man, New York Stock Exchange, please, CEO, whoever's in charge, please, I would love to go on a Zoom call with you and I'm serious and talk to you about why you remain open. on such an important day. There's no excuse for it. We need to close for it, for our veterans. It's disrespectful. It's rude. It's un-American. And this is a hill I will die on. Not cool. And do want to thank my father and everyone else who has served, and he signed up and fought in Vietnam, and there's no excuse. So, anyways, switching gears. Sorry, if you don't like it, you can tweet me on M Webster 1971 on X, and let me know why we should stay open. So for next week, what I would do is your expectation. Look at the news that happens on the over the weekend and Monday morning, and go, okay, well, what would be normal and natural reaction to that? But given no news that's material, we should move higher on Monday and not look back if this is for real. An inside day would be okay, but not what you want. When after an upside reversal, what you want to do is you want to have people that are caught off guard and that got short or got hedged and are getting squeezed or feel like they're going to get squeezed, and so they do a lot of buying. You want that, and you also wanted the people like myself who got too light because they were managing risk and now have to go back in. You want that buying power. So this weekend will be very telling how we open up on Monday, because we should have, a strong open. A 0.5% gap up would be fine. Anything more than that, I prefer. We will see, but I would do a lot of work this weekend looking at stocks that have solid earnings history, because I think if this AI thing is going to last longer, of the turmoil where people are trying to figure out the whole valuation stuff, and I get that. And if you look back to the 90s, there were times where certain themes of stocks that were high octane just needed a base build, but then the rest of the market just kind of took the baton for a while. So I look for things like the ISRGs or the Lillies, which I have positions in, or the Amgens, which I have a position in, or things like the XLV, if you want to go just more broad base, and kind of look for new merchandise. It's fine going back and, if some of the leaders had upside reversals today, to give those a shot. But I think going in and having at least something in that other space that hasn't been participating, like the healthcare, and then, like we talked about several times, the defense area looks like it has the most good merchandise to go with. And yeah, it just just stick to your rules, because this could have just been a little blip, a fake out, support around the 50-day, and then we just roll next week. So you've got to, I mean, sometimes the market just wants to just frustrate you to the most possible way, and that's what would happen, would be like a gap down underneath today's low that turns up, like, that would be the head fake of all head fakes. So
Well, one
yeah.
thing, and not to get on a tangent here, but one thing I just did want to bring up that's worth mentioning, because you talked about how, hey, some of these new names, some rotation, you might have to accept some lower relative strength in that term. And when you look at these numbers, like this is a 64, and ISRG was actually even lower. Last month it was 14, a week ago was 50. But you're seeing a very strong 3-month RS rating. Same thing with Lilly. Lilly had, as David Ryan pointed out, it had some really poor, relative strength recently, and came shooting up. You brought up Apple as a classic case of a really poor relative strength rating in 2004, just as it was forming this perfect cup with handle, breaks out, and that's the story. I mean, it started as a low relative strength simply because in 2004 it hadn't participated in the big rally of 2003, and so that's what depressed its relative strength. So when the rotation happened, though, it was all guns a blazing. So just
Yeah,
something to keep in
so
mind as you're doing your research this weekend.
that's an important point that you brought up. So whatever instrument you're using, whether it's an indicator, let's say you're using Bollinger Bands for the first time, you really want to know the ins and outs of how that works, or the Webby RSI, or anything, a MACD, any new instrument, you want to really understand the its strengths and weaknesses in the unique edge cases. So you just brought up a great edge case of the Apple with the low RS. I see so many people who only look at stocks with an 80 or 90 RS or higher. That's silly. Don't do that. That's crazy talk. What you want to do is you look at focus on those, but look at everything and put it in context. And if you're searching for the style of stocks that I'm talking about, they are going to have lower RS numbers. I don't care what it is. They could be, I don't care what the number is. Look at the chart, look at the earnings. I would focus on ones that have true earnings and sales growth. Acceleration would be, a plus, a huge plus, and do the screening that way. But also make sure, they got to be above their 50-day and they're above their 200-day. Like those are some bare minimums. I would use that as your thing, and not even use the RS for the screening for this weekend. And I do
Mhm.
have a song for the week. Do you have a song?
Well, I will just say, based on the comments, the song that everyone's coming up with is "Staying Alive" by the Bee Gees, which I
Oh, I
know
dig that.
is
I actually dig the Bee Gees, man.
okay. I
Bee
wasn't
Gees
sure how you were gonna feel about that, but yeah, I could go with that. That's, I think, a good choice. So I'm gonna defer to the YouTube commenters on that one. What do you got?
Yeah. Well, the first time I heard John Mayer Trio live, I'd never heard of them, and he started playing the song called "Vultures," which is one of my favorite songs of his. And I was like, "What is he doing a Bee Gees song for?" It sounds very Bee Gees, and I
Hmm.
actually dig the Bee Gees. So this, I'm now a new massive fan of Miles Kennedy. I did get to see him twice over this last week. He was opening up for Mammoth, and Joe Fahmy, a good friend of mine, was allowed us to go backstage, and I got to talk to him for a few minutes. He's actually a stock trader or investor, and I
Oh, how
was
funny.
yeah, I was so blown away with his knowledge. And yeah, and such a nice guy. Anyways, his new album, Art of Letting Go, that is the title track from it, and the Art of Letting Go is the song of the week for me, and that means letting go of the mistakes that you made over the last, for me, the last like month and a half of my style just not working with this particular environment. And kind of like the Ted Lasso thing with the goldfish of just have a short memory, like learn from whatever mistakes you made. If you made mistakes, sometimes it's just your style doesn't mesh with an environment, and just forget about it and just let it go. The Art of Letting Go by Miles Kennedy. Great song, great album.
Well, I think I will put that on my list. So very good. Thank you so much, Webby, for all of the information. Thank you, YouTube folks, and thank you to my UCLA crew, who is already coming in town from Washington D.C., Santa Cruz, Denver, and all the folks that are making that trip. Can't wait to see you guys soon. So take care, everybody. Have a great weekend. We'll see you next week. Take care.